had an interview with this guy from the Financial Survival Network, Kerry Lutz. I really just didn't want to raise my voice or just call him names or any of that because, first of all, what's the point of doing that? You're not, I mean, you don't even know if these people are bad people or good people 100%, so I was calm. I just gave my voice of opinions. We just talked about things like, that they should get into precious metals. And I just thought if precious metals is going to be in the bull run, you should get into an ETF because you're not paying all these premiums and so forth. You're just paying like a $4 to $10 commission. But of course, I really didn't want to say go away and just yell at their face because I understand that they have to uh, preserve that argument because they are having gold advertisements on their site. And I just didn't want to say that while I was being interviewed because they could have just cut me off and they would have never interviewed me again. So there are limits to how far you can go. But anyway, they interviewed me and it went pretty well. So I'm going to play the clip and you can tell me what you really think. All right? Thank you so much.
We are back, and you are listening to the Financial Survival Network. This is Kerry Lutz, and I've got Cyrus on with us now, a critic of the show, critic of gold, and I thought that you should listen to what he has to say because, as you know, the Financial Survival Network is not an echo chamber. We believe in getting different views from different people because you have to make your own decisions. You have to figure out what you think is actually happening, and you need to hear different viewpoints to figure all that out. So first, Cyrus, welcome to the show. Glad to have you.
Hello, thank you so much, and thank you for bringing me on. It is great to have somebody who has a different focus, and not only different focus, but has been experiencing a different result as well.
Well, in any event, so basically, just tell us a little bit about yourself, what you do, your YouTube channel, just because a lot of people who listen to the show don't know about you.
Okay. Well, what I do in my YouTube channel is I mostly cover just financial markets. I don't always cover that, and I will discuss about those other aspects later on. But I really cover, first of all, really my tune. And my tune is that I am quite bullish in the overall equities markets, particularly Dow Jones, NASDAQ, and S&P 500. I believe that they will outperform markets, particularly in Europe and Asia, and it looks like they have been for a long time. I believe they will outperform bonds. Bonds looks like it's been in the bull market, I believe, for over 30 years or so. And this is the part where you may strongly disagree, but I will see that these markets will continue to outperform yes, not just precious metals, but commodity markets in general. And what that means is that I do see that I can't guarantee you next month or next year, but I do see gold and silver falling in the next few years. And I'm not so bullish even when it comes to food and energy commodities as well. And now some people are saying, well, feeder cattle is all-time highs, but that isn't the case with corn and wheat and soybeans. And of course, those commodities feed into cattle, so that will have an effect on those prices later on. So again, I am bullish in the overall stock market. And as you can see, a lot of them are making new record highs. That isn't the case for the NASDAQ, but we will get there eventually. I hope so. And the other thing I want to cover is I also do, nevertheless, respond, and I do cover people that are all over the spectrum when it comes to the investment viewpoint, whether they're bullish in the equities markets, whether they're bearish, whether they're bullish in commodities, whatever the case. And just because they may have similar views, it doesn't necessarily mean I believe everything they say. I'm distinct.
Well, actually, I do agree with you about the Dow. and the stock market here. Think it could go higher. I think it could go a lot higher. But I don't believe that that's due to the overall strength of the economy. I think it's more due to the Fed policy and due to turmoil and collapsing economies around the world more than the underlying strength of the U.S. economy. But I do agree with you that markets here have performed well, but as far as how well they're going to perform in the future and how long that will continue, anybody's guess. But the longer that they do perform well, and there's a disconnect there between the real economy and Wall Street.
Yes, I agree. There is a disconnect, and the stock market isn't necessarily a true meter of determining how the economy works. Certainly the middle class doesn't feel like, or even the working classes feel like they're getting in a situation where they're bouncing higher, and I understand that. Just to tell you something, I've seen yesterday somebody just got hired at my retail establishment, and she was just a graduate from Boston University in journalism, and now she's working in the same job I have, and I don't have a college degree. And so, yeah, you're seeing this in a lot of places, but we'll get to student loans later. Yeah, you're not really seeing this kind of a correlation between the overall economy and the stock market, and it seems to be it's been the case for a long time. When you look at 1987, the year 2000, it isn't always necessarily correlated, but the disconnect is growing. And you want to know why I believe the markets are going to go higher?
Sure, I'd love to hear your opinion. That's why you're on.
Well, the monetary policy, the dollars pumped in, that has a small effect. I don't believe it's the major effect. The major effect, I believe, has to do with earnings. Earnings are usually continuing to beat expectations. They haven't last quarter, but nevertheless, last quarter we were bullish. And what I mean by last quarter, I mean quarter one earnings. So it looks like quarter two coming into quarter three is going to be much better. Equity risk premium is very high. That's very bullish for the stock market. There's just a number of factors. Price earnings ratio, not when you look in the CAPE methodology, but when you look into like NASDAQ, it's only around 22, 23. In the year 2000, this thing, the price earnings ratio, I believe it was triple digits. It was that high. I'm not sure, but it was much higher. And you look at NASDAQ, I mean, that to me has been the earliest asset that hasn't made its all-time high. Earlier than real estate, earlier than oil, silver, gold, Dow Jones. The last time NASDAQ made its all-time high was 5,100 in March of 2000, okay? We have a long way to go. I believe we will hit that next year. But you have to understand, NASDAQ then 5,100 is much more valuable than today because consumer goods have gone up a lot, and I'm sure you agree. So you have, yes, earnings. You also have asset cycles. Looks like commodities had their bull run. I mentioned about bonds. Real estate, I still think that it's hard for me to see to go any higher or jump a lot more. So where's the money going to all go? I mean, and you look at China, it looks like that area is slowing down. So I really see a lot of the money flowing into United States-based equities. And if not, where can they go? Who knows? Probably the U.S. dollar, but those don't last for a long time.
Yep. Well, I'm not sure about the earnings, but what I do see is that companies, financial engineering, where it's so cheap to borrow money and just buy your stock, or by other companies, M&A activity. There's a lot of reasons why the market's going up, and just the international flow of funds, because there's no growth at all in the rest of the world, and I do see the China bubble popping. So we agree on that. I've never been a proponent of selling everything and putting it in gold, but I will tell you that, gold in 1999 at $250 an ounce was a great buy, and I did take advantage of it. And gold in 2008, 2009 at $720 the ounce, silver at $9 an ounce. Great buy, and I took advantage of it. But I disagree with your prediction that it's going down to 1,000. I just don't see it. The cycle, I believe, has changed in gold, and it's just the way that it's trading, the way that the market is. I mean, the next big test in silver is $22. It takes that out, and then 26, we have to see. But it looks like the cycle has changed. I mean, you tend to think that the dollar is in good shape. I mean, what do you think of all these bilateral deals that China's doing? And, what do you think the overall health of the dollar is here, Cyrus? Do you think it's healthy? It's a healthy currency?
Really just mixed. I'd have to say it's better than a lot of currencies. Just really mixed, but I don't think that it's going to crash. The dollar index is going to go to 60 or 40 or 20. I really just don't see that.
Well, what about the fact that fiat currencies have average lifespan of about 40 years or so, going back in history? Does that give you a pause for thought?
Well, it doesn't look really bad right now. I mean, what's going to happen to get on its way? We still have the petrodollar status. We still have the world reserve currency. It just doesn't look. I don't see people really exiting the U.S. dollar at massive movement as of this time, based on what I've read. I just don't really see it. And if the dollar is going to crash, first I like to see it with other currencies, and I'm not seeing it a lot with a lot of currencies.
Well, the yen though is really at a weakened state. The debt, look, since the crash in '08, we've seen total world debt go up 40%, and the debt keeps going up and up and up. Do you think the debt can get to a point here, Cyrus, that it really becomes unsustainable?
Yeah, I don't know. I mean, maybe if it's 10 times, but if it goes a little higher, I don't see that it's going to be a serious problem. It's been getting higher and higher, and we haven't seen a whole lot of problems. It's been shooting up in the 1980s. We haven't seen the dollar to get devalued so much. It's been so.
Well, the U.S. keeps running these huge trade deficits where it basically, quote unquote, prints dollars and just takes goods from the rest of the world and gives them a promise. And how long is the rest of the world going to accept that? What value are we giving the rest of the world other than a debt instrument called the dollar?
What value? Well, it's still the world's reserve currency.
I know, but what are they getting?
Well, again, we have the strongest military. We have the world's largest economy. Look.
I know, but
I've been hearing this for years, but
I know you have, but
right, but we're not getting to the point where it's starting to hit the alarm.
Well, these bilateral trade agreements where, Russia, China exchanging gas, buying gas using their own currencies, Russia de-dollarizing Gazprom, no longer accepting dollars. You're seeing the world turning away from the dollar. Gradually at first, but a trend in motion, It could be the start of something. So all I say is get some gold, get some silver as an insurance policy, because maybe the government is going to screw up here and do something wrong. Governments have been screwing up for thousands of years here, right?
Yeah, but I don't believe the screw up will be as severe as a lot of you guys believe.
But what if you're wrong? What if you were wrong? Then what?
If I'm wrong, I believe that my securities that I'm involved will do pretty decent. And if I'm wrong, well, I certainly don't think that buying physical